Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from November 17th to November 21st, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from November 17th to November 21st, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Please note that the US government has reached an agreement to end the shutdown. As operations resume, economic data releases should return to their normal schedule, though some reports may still be subject to delays as agencies catch up on delayed publications. Let's dive into this week's events. Monday starts with US New York Empire State Manufacturing Index and Canadian inflation data, including both headline and core inflation rates. Tuesday brings Australian RBA meeting minutes, US industrial production figures, and Japanese trade balance data along with machinery orders. Wednesday features UK inflation data including both headline and core inflation rates, and the FOMC minutes from the latest Federal Reserve meeting. Thursday includes German PPI data, US Philadelphia Fed Manufacturing Index, Canadian PPI figures, US existing home sales, Australian PMI flash readings, and Japanese inflation data. Friday concludes with a busy day featuring Japanese PMI flash data, UK retail sales, German manufacturing PMI, UK services and manufacturing PMI readings, Canadian retail sales, and US PMI flash data. This week's key market-moving events will be Canadian inflation data on Monday, UK inflation figures on Wednesday, and Japanese inflation data on Thursday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the euro against the US dollar and the British pound against the US dollar, as both instruments have shown contrasting technical setups recently. Let's start with the euro against the US dollar. Looking at the daily chart, the euro-dollar pair is currently trading around 1.1618, showing bullish momentum after a successful breakout. The price was able to break above the 20-day moving average from below last week, which is a positive technical development. The stochastic oscillator is moving inside the overbought area, indicating strong bullish momentum in the short term. Looking at important levels, the euro against the US dollar has support at 1.1482 and 1.1392, while resistance can be found at 1.1768 and 1.1861. The successful break above the 20-day moving average suggests the pair may continue its upward trajectory. However, with the stochastic in overbought territory, traders should watch for potential short-term pullbacks before the next leg higher. The 1.1768 resistance level will be the key target for bulls in the coming sessions. A break above this level could open the path toward 1.1861. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3168, showing signs of weakness after failing to break a key resistance level. The price was not able to break above the 20-day moving average from below last week and is now moving in consolidation below it. The stochastic oscillator is moving lower from the overbought area, suggesting the bullish momentum has faded. Looking at key levels, the British pound against the US dollar has support at 1.3002 and 1.2835, while resistance stands at 1.3275 and 1.3432. Wednesday's UK inflation data will be crucial for this pair. The inflation figures are expected to show headline inflation at 3.7% year-over-year with a monthly increase of 0.5%. The failure to break above the 20-day moving average is a concerning sign for bulls. The pair may test the 1.3002 support level in the coming sessions if selling pressure continues. Friday's UK retail sales data could provide additional direction for the pound. Both instruments could see considerable volatility this week. Traders should be particularly cautious during the major inflation releases on Monday, Wednesday, and Thursday, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.